In 2011, Bitcoin crossed an important threshold, one that would forever change its course in the financial world. The first ever $1 million transaction took place, signaling to both early adopters and skeptics. Bitcoin was no longer just a fringe experiment or the playground of tech enthusiasts. This was the moment when Bitcoin started to be seen as more than just a digital curiosity. It was becoming something bigger, a real asset with real-world value. And this wasn't just any transaction, it was a bold statement, a declaration that Bitcoin could handle serious money. Bitcoin was ready for the big leagues. Before this transaction, Bitcoin had mostly been a tool for developers, cryptographers, and hobbyists to tinker with. The idea of using it for large-scale financial transactions seemed far-fetched to many. But with this $1 million exchange, Bitcoin was beginning to evolve from a theoretical experiment into a legitimate store of value. The impact of this single transaction was immense, not just for the amount, but for the message it sent to the world. Suddenly, Bitcoin wasn't just a speculative technology, it was a serious asset. This event caught the attention of early investors, entrepreneurs, and most importantly, institutions. The traditional financial world, which had largely dismissed Bitcoin, now had a reason to take a second look. Bitcoin's journey toward legitimacy had begun. At its core, this moment marked the start of Bitcoin's transformation into something more than a digital experiment. It was now showing real utility, especially in terms of large-scale financial operations. Up until that point, skeptics had questioned whether Bitcoin could ever handle significant financial transactions, let alone rival traditional banking systems. But this milestone put those doubts to rest. It demonstrated that Bitcoin's underlying blockchain technology was robust enough to support high-value transfers. The $1 million transaction wasn't just about the number, though. It was about what it symbolized: the opening of the floodgates for bigger players. Investors and financial institutions, who had previously stayed on the sidelines, started to pay close attention. For some, this was a wake-up call that Bitcoin was no longer a passing trend, but a technology with serious disruptive potential. It's important to understand that this event didn't happen in isolation. By 2011, Bitcoin had started gaining traction, with its network slowly expanding. But this transaction was a catalyst, pushing Bitcoin into the spotlight and signaling the start of a new phase. Early adopters began to realize that Bitcoin wasn't just about decentralization or the novelty of digital currency. It had the power to shift the very foundations of global finance. This first $1 million transaction was a defining moment in Bitcoin's story, a turning point that set the stage for the world of institutional interest that would follow. As we look back now, it's clear that this was more than just a single transaction. It was the opening chapter of a new financial era. It proved that Bitcoin was more than just an idea. It was a force of change, one that would redefine how we think about money, transactions, and value in the digital age.